Vegas. I got out and walked this morning and cut it in half. It was so cold. Oh dear. Anyway, well, lots of listings we have. This is great. We listed 143 homes in the past 2 days. That's fantastic. So fantastic. Better do a sound check real quick. See, make sure hearing each other. Testing, so testing. Fantastic. Yeah. Better do a sound check real quick. Yeah. It works. So on with the show here. 103 under contract, and the closings was from Friday. So just I didn't update it to 0 today. Gosh, we have 1,891 single-family homes, and we had 1,768 on Friday. So that increased. And then our days of inventory went down by a day. How does that work? Because we're selling more per day. It's not that there's not inventory. It's that you all are just selling more. On Friday, our number was 106 sales per day. And then with Friday's closings, it jumped up to 116 sales per day. So we shall see tomorrow what the final tab is for February, because the closings will happen today, and then hopefully they'll get put in the MLS tomorrow. So that's what's happening. Anything else here of importance? Yes, the $1 million homes are fast approaching that 4 a day mark, like we had last year. Last year, actually 4.5. So we'll see, because the season is coming. The season is coming. So I noticed that there were more listings in the $1 million status. We have 413, and we were hovering around 399 and 400. So we have more to sell. We'll see what happens. Then on the medium price and under, 436,000 and under, we listed 33, which gave us 475. And that is a huge increase, because we were at 440. So I'm happy to report that to everybody. And okay. Anything else going on? Investors still buying. The interesting thing that I wanted to talk about just briefly is we talk about inventory. And I heard another person today on YouTube talk about how low the inventory was. And in 2020, we sold 41,000 homes. In 2019, we sold 41,000 homes. In 2018, we sold 41,000 homes. There's a pattern there. In 2017, we were 44,000. And in 2016, I believe it was 41 again. 2015, they don't, let's see, do I have that number? Yeah, 37,000. And then in 2014, it was 35,000. Then in 2013, it was 40,000. And in 2012, which is the last data I have, it was 37. So we've been hovering around that 40,000. The biggest jump really is last year. So people decided to sell. And one of the things that you need to know is why. Why are people selling? Well, look, they have all this equity. Look at all the equity they have, so they can move up. And more people are moving here, especially from California. So all these factors play into our market, unlike any other market. People are moving here. We have jobs. We have construction going on. We have new properties coming on, $23 billion worth of new projects that are going to bring not just new things for people to come here to enjoy, but also that's going to be jobs. So there's going to be more jobs. I just think that I don't like to listen to people that talk about the United States market, because ever since I've been here, our market has been pretty different. Really different when we were the number one foreclosure capital. But it seems like we just are different because we have a different demographic. We're right next to California, and we have no taxes, and all these things make us different. So when other people say, oh, I mean, I heard Zillow and Redfin, and they're talking, and realtor.com, they all have different ideas of what's going to happen this year. And look what just happened with Russia and Ukraine. That caused the stock market to retreat, and then the investors went back in. And when the investors retreat, a lot of times they'll put their money in a safe place like Treasury bonds. And let's just look here for a second as we move along. Treasury bonds. So the mortgage bonds and Treasury bonds. And so the Fed's balance sheets right now, they say that they're going to stop purchasing the mortgage bonds. Well, what happened? Now they're purchasing them because of the Russian and Ukraine war. And that's going to drive, the point is that drives interest rates down. So they're still buying 70 billion in mortgage bonds through reinvestment right now. So, and I'll be honest with you, I don't know what that means. I'm not a financial analyst, but I do know that the interest rates went up and then they went back down again, and they're probably going to go up, between now and the end of the year. And who knows? This is the forecast. We anticipate mortgage rates to rise along with inflation during the first part of the year towards 3.75. Well, it's already done that, and in some cases it's up higher. And then it went down a little bit. And so this forecast says, with the federal action, softer stock market, and slowing economic conditions, interest rates should head lower in the second part of the year towards 3%. Well, we'll see. When they say that the slowing economic conditions, Max is my moderator on Saturdays, and he shared a number with us that we have 18 trillion in United States banks right now, a record high. So that's corporations and personal, business and personal. And if that's the case, and we have more money than we've ever had, why is that going to slow down our economic conditions? And real estate is 18% of our economy. So I don't know. I mean, what do I know, right? I mean, I'm not an economist, but just looking at it from a bird's eye view, it looks to me like not a lot's going to change. I think our economy is going to continue to grow. And so who am I to dispute the experts? I don't know. But they say rates are going to rise. Well, they did the first half of the year. They're going to decline the last half of the year. We'll see. We'll see, everybody. We don't really know. We don't really know. And that's the bottom line, because what I do know is I think Las Vegas is one of the better places to be in this country. And a lot of other people do too, as we have 3+ million people in Nevada. One other thing I wanted to share with you today, and then I have a dentist appointment, so I won't be talking too much longer to you. But the Nevada energy sources, I think it's important for you to know that we are in the top 10 for LEED certified buildings. And that was in 2016. And of course, they don't come out with this every year. But we had 22 projects going on that I guess gross square footage was 6 million, and that put us in the 6th place. And I'm not sure how they figured this out. If you look here, I guess per capita, that's how they figure it out, per capita. So we have 2.37 per capita certified gross square SF. What in the world? I didn't quite get that. Gross square feet? I don't know. Interesting. But anyway, the one thing that caught my attention more than that was the water reserves. If you look down here, we have 8 years of water in reserve. And I think that that should be of interest to everybody. And then on conservation, Las Vegas uses just 5% of Nevada's water. And I think that's an interesting statistic, that we're only using 5% of our water. And in the infrastructure, let me move this over here a little bit. 99% of all indoor water is recycled. Wow. And this came from the Nevada Water Authority. So quite interesting stats, because I know people worry about water, but I think earlier when maybe the beginning of the year, maybe the end of last year, when we talked about the water and people were very concerned about it, one of the things that we noted, was that we have $23 billion in projects. These people did their homework. They're not building if they think we're not going to have enough water. I mean, so I'm not as worried about water as I know some people are. So I think we need to educate ourselves so that we can, soften other people's fears as well if they have the same issue. I'm saying goodbye, Gracie, for today, and you all have a beautiful day, beautiful Monday, last day of February. Tomorrow's March 1st. I will be meeting with my mentor, Mari Smith, for 2 hours, and she's going to help me decide how to better grow my businesses, and then I will share that with you. So that will be probably Wednesday or Thursday. I'll get my act together on the notes and everything and share that with you. And then also, I will see you tomorrow, and maybe Jimmy will join me. I thought he might today, but he snuck away. Okay, everybody.